Hello and welcome to another episode of FinTech Focus TV with me, Toby. And today I am delighted to introduce you all to Peter Stimson from MQube. How are you?
I'm good. Nice to meet you.
Likewise. So, love getting to know a little bit about the business over recent days on the research front. But we've also had a little bit of time off camera finding out about the journey, the story so far, lots of different bits and pieces you guys are involved in. And it certainly sounds, I'm a big fan of innovation. And I love people who are sort of like looking at problems and turning them upside down and iterating the products and the business as it grows. You're the head of product over in the business.
Yes.
I think one of the most fascinating positions in technology at the moment, full stop, because I think people are starting to think in a really intelligent manner about how things can iterate and improve. So it's one of my my guilty pleasures speaking to people like you, Peter, and finding out a little bit about how things are moving. So we've got lots to get into today, and a lot discussing the sort of journey that you guys have had over that sort of time. But let's kick off a little bit with a bit of an introduction to you, and then tell us a little bit about MQube as well.
My potted history, I won't spend too long on it because we could be here all day doing that. My background is I've been in mortgages for sort of over 30 years. So I spent the first sort of 20 years kind of working directly in mortgages, basically in product development. I came out of that kind of in 2010, 2011, after sort of the financial crisis, and kind of went onto the other side working for a couple of companies that kind of worked with lenders, so CoreLogic, and then more latterly with Landmark. So the brief was really to sort of try and help lenders improve their service proposition and kind of work closely with them to get products and services to market more quickly. If you look at kind of what happened sort of post sort of 2008, 2009, interest rates went through the floor. So if you kind of go back pre-2008, it was all about how could we do stuff and take more risk, how could we get more stuff lent, how could we create more innovation, for want of a better phrase. 2010, interest rates went through the floor, and rates went down to kind of 1.5%, and the whole kind of
how we long for those times again.
Well, we do and we don't.
Depends which side of the fence you are.
Yeah,
exactly.
Yeah, exactly. It's kind of like, not sure that was kind of a norm, really. But when you've got rates down at that, and you've got lenders all offering essentially the same proposition, where interest rates between lenders were kind of like 2 basis points different, it really became a service proposition. So you've got, I was kind of working with the likes of Santander, Barclays, Lloyds, Landmark, particularly on the surveying side of things. And the messaging that was coming across from all of them was, we've all really got the same product, or pretty much the same product. It's all about the service. How can we deliver a better customer experience to our brokers and our customers? And how can we do things smarter? How can we do things quicker? How can we get an offer out quicker? And what's a better, smarter way of doing this? So that's kind of where the market got to. It's been slightly dislocated in the last kind of 18, 20 months with the way interest rates have gone. But it is going back to that, and it will come back to that, because obviously rates are dropping, obviously a little bit more competitive on rates at the moment, but it's still about customer service ultimately, between lenders, and about what lenders can deliver to the consumer. So that's kind of the background to how MQube and Empowered came about, which is about how can we deliver a better proposition to customers. Because if you look at most of the lenders out there, or nearly all the lenders out there, they're built on really legacy technology propositions and approaches. So MQube was really about how do we revolutionize how we think about mortgages and how we tackle the whole situation.
Peter, why do you think that needed revolutionizing?
Because I think everything got a little bit cozy, and everything kind of, well, it was working, it didn't really need fixing. And when you're kind of lending what you need to lend through just doing what you need to do, nothing really changes. And I think technology had kind of, first of all, there's a kind of a technology revolution which enables you to do things differently and more quickly. Secondly, I think we were kind of seeing a gap in the market just from that side. thirdly, I think, we could see, or I could see, and I think Stuart and Richard, who set the business up, could also see a kind of a gap and a need from the consumer side as well. If you look at across, other sectors of the market, with that Netflix or, online sort of deliveries and stuff like that, you could see how the need for, speed and, instant decisioning and everything was happening, and it wasn't being delivered in the mortgage space. You can go online, you can get a quote for insurance in, 2 minutes or something like that, and yet it takes you, sometimes, a week to 3 weeks to get your mortgage offer out. Why is that? And we kind of, Stuart and Richard kind of saw that gap, and I kind of joined them, fairly early on in the journey, and I kind of shared that vision that this can't be right. There's something needs to be done about this.
Yeah.
So that was kind of the the basis of the business to start with.
I think it's so interesting that, isn't it? Because I talk a lot on this show to people who are recognizing problems, and those problems are usually about one of a plethora of things, but most of them are about how can we make this as easy as possible for people to utilize the projects. I spoke earlier on about removing friction, and that customer experience piece is so critical for people to win business these days.
Yeah.
In a world there where our smartphones effectively make everything as easy as possible. I love the whole concept of Google and how they simplified that front page, the story about how they simplified that front page to make it as easy as possible with as few words as possible for people to make the clicks, understand how to utilize it. Yeah. And you're right, it can be one of the most incredibly frustrating experiences in anyone's life to go through a mortgage application and do the journey. Some people in the office who I've been speaking to recently who still feel some of that pain. But I think it's a hell of a lot easier than the pain was, a few years ago. So what I loved about reading your story and finding out a little bit about the business is that focus on innovation and sort of taking that customer experience project and saying, let's look at technology, let's look at user experience, let's look at data science, let's look at all of these different areas here where we can do something and drive something efficiently within the marketplace to take away pain in ether. So tell me a little bit about how that's come about for you guys and what it's looked like.
Well, so if you look at a lot of the new sort of lenders who've come to market in the last 5-10 years, what a lot of them have done, or most of them have done, is they've either gone to market and bought a system off the shelf or built a system that's kind of bolted bits of other systems together. What we've done, we've built our own system entirely, so there's no kind of Frankenstein's monster of a system where you've kind of grabbed a bit of one system and whacked it into another. So what we've done, we've looked at the entire customer journey from start to finish, and looked at kind of every single point of friction and tried to reduce that or remove it entirely. So every question that you kind of ask a customer as part of the mortgage journey, we've kind of said, well, first of all, how do we ask that question? Is that the right way to ask that question? Secondly, do we need to ask that question? And if a customer asks no to that question or yes to that question, we remove the next set of questions depending on what their response was. That's the first thing. And secondly, it's all around the documentation that the customer needs to provide. So a lot of the time, when a broker, because obviously we're broker direct at the moment, so 70% plus of the market is introduced from intermediaries. When a broker submits documents to support a mortgage, be that bank statements or pay slips or something like that, a lot of the time they're submitting them, uploading the documents, and behind the scenes there's someone within the bank getting them and rekeying them. So what we've also managed to do, again, our own proprietary technology, we take the information that's on a bank statement and we're managing to automatically read that and categorize it. So for example, expenditure information, we're managing to read that information off the bank statement and categorize it into essential expenditure. So for example, food, petrol, council tax, stuff like that, and discretionary expenditure. So, for example, a first-time buyer has a lot of discretionary expenditure because they're living at home with mum and dad. A lot of that's probably, without wishing to categorize first-time buyers, a lot of that might be going on beer. When they buy their first home, a lot of that may not be going on beer anymore. So, we have to be sensible and describe what they may no longer be spending when it actually can go towards a mortgage. So so it's discretionary and non-discretionary expenditure. Same with a pay slip. So on a pay slip, we now can automatically read a pay slip into it. So we can just discern what is actually basic salary, what is bonus, what is tax, what's national insurance. So with documents, we can read the data automatically in. So again, it saves documents in a work queue, waiting for someone to pull them off, key the information back in. So again, it's reimagining the customer journey, picking information up, and basically, so when the data is coming in real time, we're answering questions back in real time. So if the broker types a piece of information in and it flags a question to us, so if he puts some information in that, we suddenly go, well, hold a second, we need an answer back to that. Question goes back in real time to the broker, not waiting, for someone in a work queue to pick that information up, go, well, hold on a second, I need an answer to that. Bang, real time back. Sorry, we need a response back on that one because you put something a bit strange in there. So that's kind of what we built in short order.
I want to touch on that quickly because I was having this conversation with someone who works in the capital market space recently about 2024, and they were very much banging the drum of sort of buy and build as their sort of thing, which comes back, I guess, a little bit to the Frankenstein's monster. And I think if you look at it in the capital markets world, you've seen these sort of massive legacy systems that haven't been fit for purpose, that people it's too expensive for people to bolt on a whole load of additional smaller vendors to make the whole thing work a little bit more appropriately for them, to digitalize and bring it into them. The enterprise systems there don't necessarily evolve at the same sort of pace. They don't need to necessarily. They're sticky with businesses, and so you have these sort of botched on people or business or products alongside it. I speak to a lot of people who genuinely believe in the sort of whole buy and build piece, which is about, right, you have your in-house team that are building a product, and then you bring in various different bits, and interoperability has become very much the sort of buzzword of play. And then there'll be purists who talk a lot about the building your own and sort of having it very bespoke and tailored to your exact needs, so you're solving the problem and you have a lot more ownership around that sort of piece. And I guess there's sort of strong arguments for each way of doing things in terms of what you're looking at, but it sounds like you're very fixed in that sort of thing. The Frankenstein's piece, I can definitely see both sides of the attraction for it. And I think if I think about our systems that we use in my business, the day-to-day business of running a recruitment business, there's a CRM and there's lots of different bits and pieces of technology designed to make people more efficient around that as well, and it all works relatively seamlessly and they all plug in. But it's a bit of work to make that happen at the same sort of stage, isn't it? So just interested. I know I've sort of talked around something without asking a specific question around that, but I'm interested in your take on that, particularly from a product background.
Yeah, so I think it's a difficult question to answer depending on what the system is and what stage it's at in its life cycle, really. So I mean, I've worked with lenders who've had some of the big six lenders. And the challenge you've got is some of the systems are so old, you almost get told that you're not allowed to touch them because there's change freezes that go on in various points, and where you are allowed to do work, it's such a painful process to actually get work done because of the knock-on effects that could happen 3 stages down the line. So I think you're almost better off at various points, starting again, for the net gain you get with a new system versus, the implications you get on a legacy system. It's very difficult to judge sitting from outside about, what the challenges are with some of the legacy systems and some of the big six, but it's very, very painful with some of the legacy systems is all I can say.
Yeah. And so having that sort of ownership of saying there, and again, and I love this from the product mindset, is saying, let's start with the customer in mind. Let's look at their journey. Let's ask the questions and say they're the right questions, which I love, particularly in something like the mortgage space, which hasn't, I think, innovated as much. If you're asking the questions there that make it easy and think about that journey, that allows you to create something which I think has customer experience at the fore of it. So it's an exciting opportunity you're looking at.
Yeah.
I also want to go a little bit into it. You're a venture-backed business. I think you've raised something around the sort of $11.5 million or so. It's
a little bit more than that now.
Perfect. Yeah. So it's something which VCs are enjoying the idea of, which isn't the easiest thing to get at any sort of stage in the process. So tell me about that sort of journey. Coming through with a new idea, and again, it's difficult. I think people take for granted about VC money, and whether it's just pushed into everyone who's got a little bit of a track record behind them. But when you're looking at something there that hasn't necessarily been done in an industry, it's almost, it's almost more impressive when you get that sort of backing to
Yeah.
suggest that people get it and understand the problem and can see the future in it. And particularly when you're a business which understand to have iterated a fair amount in your process and looking at it and saying, again, thinking about things as we've spoken about before, like are we here, coming into
Yeah.
this market to become a bank, or are we, I know you've licensed your technology. There's lots of different strands to where you're going, and sometimes when you're dealing with VCs, they want to have a very sort of clear structure. It feels like a business that's sort of iterated and continued to morph and continue to evolve, and probably found the right backing to be able to do that as well.
Yeah, we're a little bit different. We're not a lender, as a pure lender as such. So we're a little bit different from other lenders out there. So we're a technology business that also lends. That's probably the cleanest way to describe us. So I think Stuart and Richard at the outset had an opportunity to go down the banking route. So we could have done that, but I think we decided against that simply because there's lots of sort of startups that have gone down the banking route. If you go down a banking route, you need a lot of capital, is the first problem. The other challenge you have, if you do that, obviously, you have to raise, obviously, in savings. Savings obviously come at a cost, and then that probably pushes you down a fairly niche route in terms of lending. And then that inhibits, how quickly you can potentially grow, because obviously you end up in fairly niche markets, be that sort of potentially commercial finance or sort of fairly niche mortgage markets. So what we decided to do was basically open our platform up for other people to be able to use it. So from a lending perspective, what we do is we work with funders and enable them to use our platform to lend. So at the moment, we have different funding agreements with funders. So that can be pension funds, it can be hedge funds, it can be other banks. And essentially what we say is we will allow you to use our platform. We will lend your money in our name. So we have a lending brand called Empowered. We have a sales force out there. We will deploy your money into the market using our brand. We will work with you to create mortgage products that work for both of us. We will agree jointly a lending criteria that works for us, pricing that works for both of us. We will lend the products, we will originate, we will complete the products, we will arrange them to be serviced for you, and obviously the economic interest then flows back to the original funder. So essentially we create the platform, the operations piece, and obviously the technology in the middle to do that. And it allows the funder to get into the market quickly without having to obviously have the operations piece in the middle. So if you're, for example, a US bank or a pension fund, you don't need the operations piece. You can deploy capital into the market quickly. If you wanted to, you could also, withdraw quickly without having that kind of whole expense and challenge or even the licensing requirement to operate a UK lender. So essentially, we're the piece in the middle that allows people to deploy UK mortgage money into the market. So that's kind of one side to the equation, which is obviously attractive because obviously there's a margin take for that from us.
Definitely.
The other side, which is attractive just from an investment side of the piece, is obviously the technology side. So what we're also doing is we're looking to license the technology to other providers as well, because obviously the technology is very efficient, it's very slick, it's very attractive to other providers in the market. So that's also a play from that side as well.
And how's that been received? Because as you say, look, when you see that sort of stuff and people are, as we highlighted beforehand, people get sort of protective of their own technology at various different stages, and particularly when you're talking to CTOs and even, dare I say it, CPOs and people in the product world, there can be a lot of ego around that's that sort of piece around what they're dealing with within that, and so to integrate that and say that you can license the tech and go through that sort of stuff, it depends on who I'm interested to hear the take on that side.
This is the no one likes their child being called ugly conversation.
Exactly.
Yeah, I mean, a lot of the technology out there is kind of licensed from third parties with some sort of bespoke stuff on it. So a lot of it is not kind of built in-house. So a lot of it's through third parties. So it's not quite as bad as you think it might be. So there's some fairly in-depth conversations going on with quite a few people at the moment. Some of them are fairly advanced on that side. So then, there's maybe some news coming down the line fairly shortly on that. So
breaking news.
Well, potentially, yeah. So yeah, so they are a little bit challenging, and it's probably a little bit more challenging with some of the very large lenders. I think that's probably some of the slightly more challenging ones, because obviously the larger scale you get, the more kind of slightly more difficult it is. But I think once people see the technology and people start having a demo on it, they realize how good it is, and how different it is than perhaps some of the legacy systems out there.
Makes it a bit easier to sort of on board from that sort of stage, doesn't it?
Yeah, exactly.
So it's gone through this sort of evolution, and look, I think you mentioned beforehand that 2021 was the year the product launched. Tell me a little bit about, whilst the business was obviously started substantially before that, 2021 when the product launched. Tell me a little bit about what we see moving further forward. What's exciting in the business? Where does it head? What's the vision?
So it's kind of a two-pronged sort of vision, really. So I think there's obviously the mortgage side of things, which is obviously expanding and growing the product side of things. So at the moment, we are, as a lender, in the residential mortgage space. So we have funding on that side. So the plan for the immediate sort of 2023 side, the 2024 side of things, what year I was in then.
Easily said, isn't it?
We're only in January, when this is being filmed. Is basically to grow the residential side of things. So expand that and probably look to add some additional products into that. So we're looking to potentially expand into maybe buy-to-let by the end of the year, and potentially some other sort of sectors of the market. So that's
buy-to-let, if I'm reading the papers correctly, seems to have another life in it all of a sudden again, doesn't it?
Yeah, buy-to-let's an interesting one. Buy-to-let is all around interest rates.
Yeah.
So buy-to-let becomes potentially viable again if rates drop. So if rates don't come down as quickly as we think, I think maybe not. But if rates do, potentially yes.
Yeah.
But it's a rate-driven product, really. So.
And do you have a view on where we're looking at rates-wise at the moment?
Ooh, I do.
Not sure whether you can say.
Well, I can say I wouldn't want to put any money on it. So
I don't think anyone knows, do they?
I think they're probably coming off by about half to three quarters in 2024.
Yeah.
But I think it's all really up in the air, depending what happens in the Middle East. And
it's so volatile, isn't it?
It's incredibly volatile. Exactly. I think there's going to be pressure because of obviously the election coming up this year as well. We've got to have an election roughly by the end of this year. So
looking for good news stories.
Yeah, exactly. And I think the other strand, obviously from our side, is obviously the technology sales piece. That's, I think, going to accelerate quite a lot in 2024. I think that's a piece that a lot of other lenders are starting to pick up on now. So I think that's going to accelerate incredibly in 2024 as well.
Yeah, exciting times for the business. Let's look at the. I'm always keen for this show to sort of give people value and have some lessons from it. And I think from this product position that you come from, and particularly that in a sort of scaling business that's sort of going through rapid change and iterating as it sort of moves through. If you're to say some of the key learns that you've had and you've seen over that sort of period, which you could share with people potentially who are in a sort of product thing or a startup phase or wherever it may be in the journey, what would you say some of the key things that you've taken away that have been really insightful for you on the journey so far?
Oh, I
know I didn't prep you for this one as well, so I'm throwing it right at you.
I think from our side, persistence was one of the key things. I mean, I joined in 2019. I know Stuart and Richard had been going for 2 or 3 years before that. We went through COVID with this business, where we weren't sure we were going to get. The funding was incredibly challenging over that period. We kept going. We've had a lot of kind of knockbacks in that period. Where we weren't sure we were going to get off the ground. The capital markets in 2020, 2021 were completely dislocated. We weren't sure whether we were going to get funding deals from people. We kept at it. We worked incredibly hard to get stuff done. So I think the biggest thing was persistence, and we also had a lot of support from a lot of people, particularly the VCs and a couple of funding partners as well.
But they did that because they could see the vision, right? And when you've got a good,
They could see the vision,
when
and I
you've got
think
a good team and a good, a good idea
yeah,
that solves a problem, I think it becomes easier, doesn't it?
Exactly. So I think, I think where we had kind of, technical problems, I think the end goal and the vision was incredibly strong. So I think, they supported us. I think, they could see Stuart and Richard's vision, and I think they believed in us. And I think that was the important thing. So I think, there was lots of little setbacks on the way. I think we, like in any business, we made some little mistakes on stuff, which put us back 2 or 3 weeks at different phases. But I think persistence is just the key thing when you're starting anything, and not to be too downhearted about bumps in the road. And if you can get through COVID, you can get through more or less anything. I think.
I think I'll probably say exactly the same thing. Just coming back into that, and I'm always interested in what we can learn from from mistakes and such. Like if you're to look at that and say what can you navigate around, and what are some of the icebergs to look at on those mistakes? What do those mistakes teach you?
I think it's probably about hiring the right people at the right time. It's a difficult one because you always tend to look at stuff in hindsight and think, oh, maybe we should have hired that person quicker, or maybe not hired that person at that point in time. But yeah, it's about having the right people in situ. You're working on a budget, particularly in the early stages, because you've got a very finite budget, particularly with seed capital at the start. But sometimes you need more people at certain stages and less people at certain stages. So I think that's probably a learning, I think, at particular points.
It's fascinating, isn't it? So obviously this is my sort of favorite subject in the world, and it's so difficult. There's I don't think there's a company that sort of absolutely nails it all the time, but I think I saw something recently with someone who was talking about it not necessarily being the problem of making the hire, but it's also recognizing it's wrong sometimes and being bold enough to make that sort of change. And that paralysis, I think, sometimes stops people, particularly when you're in an innovative business and that there's funding in there and there's not an inexhaustible amount of it, and you've got to work to the right sort of thing. Actually making these sort of talent dense environments, which I think, going back to, you mentioned Netflix earlier on, I think them and Amazon particularly have done very, very well at sort of making it incredibly difficult to get into the business, and then making sure that they're hiring with people there who raise the average. And I think when you can get that bit right, you've got a great chance of moving forward at pace as well within the business.
Yeah, no, exactly. It's if you get one good hire, they're worth 2 good hires. If you get it right.
There's some stunning statistics around that as well. So we could be talking. That's a whole nother show, Peter, around where we're going. So look, a very exciting time for the business. Sounds like you guys are doing some very cool things and have even more of it to come through. I wish you the very, very best of luck with where it's all going. If people are sat there and they want to find out a little bit more about the business and hear more about the story, or actually find out about the the idea, or want to hear more about licensing the the tech, etc., what's the best way for them to get in touch with you?
Stuart Cheetham is probably the best guy to contact. He's on LinkedIn. Our website, obviously, empowered.co.uk is the other place to go. We're very active on social media. So if you just look on LinkedIn, you'll find Empowered all over LinkedIn and social media. They're probably the best starting points.
Follow, subscribe, and enjoy the show.
Yeah, basically.
Good man. Peter, it's been an absolute pleasure having you on the show here today. Thanks so much for joining us, and I wish you and the business the very, very best of luck for the future. It's been great to hear the story.
That's great. Thank you for having me. Appreciate it.
Absolute pleasure. And thank you all for watching. We will see you soon on another episode of FinTech Focus TV. Thanks a lot.